2024 has been the year where institutions and the biggest players out there, like BlackRock, for an example, have been embracing the technology. They've been embracing the space in a very large way. But what if I told you that they've been here for years, right? Because they have. They have been here for years. They've been planning, they've been preparing. And now, as we start to see things shifting in a large way, I do think that we are about to witness some very large moves from these big players. Now, I do really want to go over a lot in this video. We'll obviously, talk about BlackRock a lot, but I do want to address a few things first before we get into it. So with that being said, welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So let's start off with Ripple Swell 2024. And this is actually from Ripple themselves. They talked about how it showcased how crypto and blockchain are reshaping global finance. From regulation and stablecoin growth to tokenization of real-world assets and financial inclusion, the future is here. Now, this is the 4 key themes. Now, I'm going to ignore one, which is, of course, the last one, because it doesn't really matter too much. Basically, it's just talking about, philanthropy with blockchain and crypto, which, yes, technically, it is a big thing. It's, great. But I really want to talk about more so the important things that are going to drive growth of this entire space and ultimately bring in the big money, right? So as we first start off, they do talk about ETFs, they talk about stablecoin growth, and they even talk about tokenization. Those are the key 3. But regulation, right? Regulation to me has been that switch. The switch that once it is flipped, it's a green light for all the big players, right? If we're talking about Bank of America, Citi, JP Morgan, like all of these big players, a lot of people still think that they're on the sidelines. They're waiting, right? But they're not. They're here. They have built solutions. They've created things with this tech. Regulations allow them to go live. They've been testing. They've been trialing. They've been utilizing, these test nets essentially. And it's all, just, testing and trialing. But once we see the regulations hit this space, that's when the green light officially goes on. That's when, everything goes live. Now, if we look at this, right, digital asset regulation remains top of mind. Blockchain innovation is flourishing in markets with clear digital asset regulation, and unfortunately, the lack of guidance in the US has stifled the nation's crypto company growth. While some progress has been made, including digital assets like XRP receiving regulatory clarity in the US, many Swell panelists agreed that regulatory uncertainty has historically been one of the biggest challenges facing the crypto industry. Now, we have a few quotes here. Number 1, we have having a regulatory structure that will help separate the good from the bad and the regulated from the cowboys or worse out there is really something that we need. Now, this is from a former chair of the FDIC and founding chair of the Systemic Risk Council who took the main stage with Monica Long, Ripple's president. Now, her name is Sheila Bair, and she actually expressed confidence in crypto's potential, particularly around real-world asset tokenization use cases, affordable remittances, and also disintermediation, and urged the industry to provide transparency to regulators in order to improve public-private collaboration and digital asset innovation. And of course, yes, Ripple is one of those players that are openly collaborating with some of the biggest names out there. But we also have the crypto ETFs and stablecoin growth. We know that this is becoming a big deal. Obviously, I don't want to waste too much time on this because we've talked about the stablecoin, we talked about the ETFs so much. But I also want to go down here to the real world use case reign supreme, right? While consumer-focused crypto applications like NFT collectibles have historically driven adoption surges, early use cases should be viewed as a sign of the times, a rudimentary stage in the technology's evolution. Swell highlighted the ongoing shift from retail to institutional interest in crypto as trends fade into the background and real-world use cases move towards the mainstream. Now, they do mention Societe Generale Forge, for example, which has utilized blockchain technology to give clients the options to settle securities on-chain via their stablecoin. By leveraging a bank-grade digital asset custody solution to manage their stablecoins from issuance to completion of settlements, SG Forge can offer their clients streamlined services while maintaining the level of trust and security expected from a financial institution. And this is just one example, by the way, of many of the use cases out there that could potentially be realized in with this tech. And they actually do even mention here, there's so many different use cases Like the internet doesn't have one internet company. There's dozens of really important big companies. And so there will be quite a few very important blockchains. And this is actually from Pantera Capital. But as we really think about this, right? Yeah, like the biggest things are starting to be realized in. And, as we really think about XRP, even with the stablecoin, I want to just really kind of put a spotlight on the fact that Ripple even said here that they plan to use RLUSD as well as XRP in its cross-border payment solution to enable streamlined global transactions for its institutional and enterprise customers. As we talk about all of these big things happening, the number one thing in my mind is how fast, mass adoption can happen. Okay? Which we're going to talk about. But number one, as we really think about BlackRock, right, the thing that everyone's looking at is the BlackRock Bitcoin ETF. Everyone has been talking about the, Bitcoin ETF. Oh, BlackRock is here. They're, they have their ETF. That means that they're buying Bitcoin, right? Like clients are buying Bitcoin in the ETF and BlackRock is making money off of the fees. That's basically it, right? This Bitcoin ETF from BlackRock is not incredible to me. It's not like a massive thing to me. Now, if BlackRock was, say for so, let's just say that they're offering DeFi initiatives through like a network in this space, I'd be like, that's huge, because that is a big sign that BlackRock is basically, exposing their clients to DeFi. They're bringing in users to the space. Through a Bitcoin ETF, yeah, sure, people are buying and selling a trust, but it's nothing, that incredible to me. It's nothing like massive. But the big thing to focus on with the ETF is that BlackRock is here and they're looking at the next big thing. The Bitcoin ETF, sure, they're making money off of it, but what are they really looking into next? And Larry Fink already told us, right? Number one, he said, I believe the underlying blockchain technology is fantastic. Okay, listen closely to this.
Well, no, I actually believe the underlying technology is fantastic because the blockchain will help you accelerate the processes of transactions. The blockchain will help you identify. I mean, let's be clear. If you have a pure blockchain and you have knowledge of who the buyers and sellers are, we could then, we don't need custodians anymore. Okay. Well, no,
So again, they're very bullish on the tech, but what else? Well, the next step going forward will be the tokenization of financial assets.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stock. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. If you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
So again, they're already telling you what's happening here. And even down here, we have, how tokenization of real world assets is already starting. BlackRock is very bullish. They're very bullish on the tech. They're very bullish on the next step here. It's not about Bitcoin. It's not about the Bitcoin ETF. It's not even about Ethereum. Okay. It's about the tokenization of everything and the tokenized economy becoming a reality. And again, I look at Bitcoin and I look at Ethereum from a transactional point of view. And if we're talking about $1 trillion moving over Ethereum, I mean, just imagine the network effect of that for Ethereum. Imagine the gas fees, right? So that's why Ethereum wouldn't be a viable network. I say this because the public chain is what's going to be utilized. We know this because the big institutions have already told us that it's not about the private chains. They want to utilize the public blockchains. Ethereum as a public blockchain is not viable. I'm sorry to break it to anyone out there that's saying, Ethereum is going to, go here, there, wherever. It's not a viable network. We know this because if we go back to 2022, around roughly like April, May of 2022, when we saw Yuga Labs launch the Bored Ape lands, the network effect from just the retail side buying into that and claiming their land, it caused gas fees to be about $2,000 per transaction. Nobody is paying that. Nobody is paying the gas fees on Ethereum to move $1 billion, $1 trillion. So if we're thinking about the tokenized economy and the tokenization revolution, it's not going to be on Bitcoin. It's not going to be on Ethereum. It's going to be on the next generation tech. Now, over here, I did say, isn't it kind of crazy to think about how fast the internet has grown into what it is today? I personally believe that with how huge the bridge is when it comes to the internet to billions of people, the entire crypto market will experience similar growth but much faster. Most are looking at potential outlooks of mass adoption being 2030 or beyond. To me, it happens much sooner. We are seeing the big banks building bridges to centralized exchanges and asset management companies like BlackRock going all in. Tokenization is going to accelerate the mass adoption of this technology in a huge way. But the main thing is regulations. Regulations will be the green light for everything to be realized in. It will enable the institutions and the enterprises that have been here building. Crypto holders, we are about to witness the largest paradigm shift in history, and I personally believe that it all begins in 2025. And the reason why I say 2025 is because that is the year of regulations. That's the year where everything starts to be regulated. That's the year where everything starts to become legitimized around the space. And I do think that that is the year where we start to see the biggest moves being made by the largest players out there. Mass adoption can happen almost overnight depending on what major player goes live with this tech. Okay, it's as simple as an update to a phone, right? Recently, we saw phones being updated to accommodate for AI. Almost everyone now has AI on their phone. You could utilize AI in a very large way. Look at how fast AI adoption has grown just from like ChatGPT, for an example. If we're thinking about crypto, if you're streamlining the way that money is moved, and say for so it's like MoneyGram or Western Union, all of a sudden they're just upgrading their internal process, and now it's running on DLT. Me and you wouldn't know that it's running on DLT. We just see, how fast it is, how much more efficient it is to move the money, how much cheaper it is. We don't know what the tech is. We just are seeing how great and how fast things are moving now. And, it could just be pushed behind a new UI. But that's how fast adoption can happen when it comes to this type of technology. That's the background, right? It's the background technology that you don't even see. It's the back end tech. You're not seeing it on the front end of things. You're just seeing a new flashy UI, for an example. But I also want to take you guys over here because this is BlackRock confirming where we are at. BlackRock, blockchain and digital assets are being adopted faster than major revolutions before it, like the internet and cell phones. We are still so early. Now, this got posted on December 8th. I believe that this got posted a little bit earlier on, but if we really take a look at this and we listen closely to it, right, it confirms just where we are headed. And by the way, this got officially posted on October 3rd. But check this out.
BlackRock, I really spend a lot of my time thinking about the future and some of the disruptive changes that are impacting the world and society and the economy and our portfolios around us. Oftentimes, this is about disruptive technologies. Oftentimes, it's about societal changes. But what we found with blockchain and digital assets is that in some ways, this is one of the fastest growing technologies we've seen in the last few years. On the right-hand side of the chart, you can see our adoption curve. This is just looking at how quickly certain assets are adopted by a society. And you can see that blockchain and digital assets are being adopted faster than major revolutions before it, whether that's the internet or whether that's cell phones. And there's a couple of reasons for this. The first reason is just we're living in a more digital economy than ever before. If we're consuming things online, streaming videos, playing video games, buying digital content, it makes sense to have digitally native assets to conduct those transactions, particularly when there's, secondly, and importantly, in a year like this year, where over half the world's population is voting for new leadership, not just the elections in the United States, in Mexico, in India, and the European Union, we're seeing more geopolitical risk than before, and in fact, declining trust in institutions, whether that's trust in government institutions for maintaining peace and order, whether that's trust in central banks in terms of keeping inflation under control. More distrust has exacerbated the need for a global monetary alternative. The third we're seeing is demographic changes, the rise of the millennial and Gen Z generation. Millennials, at least in the United States, are set to inherit trillions of dollars, are entering peak earnings years in their work, and are increasingly playing an important role in the economy And millennials are very different from previous generations because me, were the first generation to be digitally native, growing up with the internet, growing up with computers. We understand digital better than previous generations, and that means we're more likely to adopt digital currencies. And then finally, what I think has been really important to BlackRock in our journey in the digital asset space has been the maturing of infrastructure in digital assets. We've seen billions of dollars move in venture capital and private equity into digital assets to fund incredible innovation in blockchain. We've seen the regulatory environment evolve to get more constructive around digital assets and how people can buy them. We've seen extremely talented people leave traditional finance to go into DeFi to help lead some of these innovations. And all of this infrastructure has really matured over the last 5 years. So between all of these tailwinds, it's really creating the opportunity for digital assets to gain broader adoption across more investors around the world.
And, this is 100% correct. Like, this is actually coming from BlackRock telling you the facts as we really think about what's going on here, right? We go back to the internet. We go back to cell phones. The reason why they were so slow, towards adoption is because the entire world wasn't already interconnected. It wasn't already digital. Today, crypto just makes sense. I have these conversations all the time, and I just try to tell everyone, I'm like, where do you usually get your emails? My cell phone. I get it, through apps on my cell phone. Okay, where do you usually get text, calls? What's your, where do you usually have conversations? Through apps. Messages. I get calls on my cell phone. Almost everything is done on a cell phone today. But what about payments? All right, well, you have Cash App, you have Venmo, you have Zelle, all on a cell phone. Even PayPal is on a cell phone. Now, imagine all of those underlying, payment apps switching over to DLT. Okay, now you have a much faster experience, but you just don't know. You just don't know why. Just a lot more efficient, just a little, update. Like, as we really think about everything is so interconnected today. Everything is already so digital. The only thing that's missing is, the antiquated rails of finance and payments to switch over to digital. That's it. Once we see that, it's game over. We have mass adoption of the tech. A lot of people look at, gaming or NFTs or no, it's going to be the way that, money moves. Changing the way that money moves in a very efficient way just by upgrading rails, the plumbing. That's how we achieve mass adoption. And that's where we get to the point where people are using the tech without even realizing it. So with that being said, I hope you guys enjoyed this video. If you guys definitely like, subscribe, to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.